Hello everyone. May I know how you all of you are? Just drop it in the comments and tell me how all of you are. Welcome to the webinar everyone. Hello. Hello Ishan. So everyone tell me where all of you are from. First let us begin with that. Where all of you are from. Okay, Shan from Rajkot. Nancy from Rajkot. Prakash from Rajkot. Arushi from Rajkot. Great, great, guys, great. So, welcome to the webinar. Um, all of you are, I hope you are all founders of your unique startups. Yes, so let us begin the webinar. First of all, let's cheer up. Before welcoming our mentor on stage, let us first cheer up a bit, right? May I know what language you prefer for this webinar? Drop in the comments what language would you prefer for this webinar. English is good. Okay, Shan. English, yeah, Hindi. Nancy, yes. Okay, so we would go with English, Hindi, and Gujarati. If it works for everyone, just drop a thumbs up in the comments. Are you all ready to begin the webinar? If you are, just drop a bring it on in the comment. Yes, bring it on. So, let's welcome on stage our mentor who has a 25 years plus of experience, a very, very insightful person, has founded and mentored a lot of startups. With your cheers, let's welcome Mr. Amit Kumar Ruparelia on stage.
Hello everyone, am I audible?
Yes, you're perfectly audible.
Perfect. I think everybody is a startup founder over here, right? Is everybody a startup founder? If you are a startup founder, give me a yes. Thumbs up, yes, anything will do. Everybody is a startup founder? Already founded your startup? Am I audible? Okay. So, if you are a startup founder, just tell me how many of you want to build a unicorn startup? તમારામાંથી કેટલા લોકોને તમારું સ્ટાર્ટઅપ યુનિકોર્ન બનાવવું છે ઇન પ્લેન ગુજરાતી આઈ એમ આસ્કિંગ how many of you want to take your startup to a unicorn level? Anybody? Okay, then let me ask you another question. How many of you don't want to take your startup to unicorn level? તમારામાંથી કેટલા લોકો તમારા સ્ટાર્ટઅપને યુનિકોર્ન જ નથી બનાવવું? જેમ ચાલે છે જેવું ચાલે છે જવા દો. Let everything be the way it is. You can put it in message, thumbs up, anything. Okay, no issues. How many of you want a life with money, wealth, time for yourself, and time for your loved ones? How many of you want to do that? કે તમારું જે સ્ટાર્ટઅપ છે from your startup, right? Okay, Vishal, Krupa, right? You want money, you want wealth, you want time for yourself, you want time for your loved ones. Even Krupali wants that. Good. And how many of you don't want any of those things? That it doesn't matter whether we get money or not, it doesn't matter whether we get health, wealth or not, it doesn't matter, right? Whether we get time or not, doesn't matter. We don't want anything. We just want to be a startup manager. How many of you want that? Nobody. Obviously, nobody would want that. Let me tell you. How many of you have exact plan and systems to grow your startup? If you are having a startup, right? How many of you have plan? You have got systems, you have got roadmaps. How many of you have that? Nobody? Perfect. How many of you think that I am asking too many questions? Right? See, I am not asking these questions to make you feel like stupids or not even to mock you. I will tell you why I ask these questions in some time. However, but before that, I thank you all, whoever is present here, for being here and giving your time. And more than that, I would even thank Saurashtra University Startup and Entrepreneurship Center, Mr. Parth Sejpal, Dr. Jivani, who arranged this for you. And their only question was, what will our startup entrepreneurs get out of this session? So let me tell you, by the end of this session, you will know where you are exactly in your journey and how to fuel it with a flywheel that grows your business exponentially. How many of you would want that? Right? How many of you want something that grows your startup exponentially? And why I am I can claim that is because I have got 25 years of experience in banks, NBFCs, small finance banks like ICICI Bank and HDFC Bank, etc. I have underwritten 3,000 plus businesses and I've arranged 7,500 crores in funding. I have been CEO of an MSME and I have been on the boards of companies. And I am not telling you all this to impress you, but it is only to impress upon a fact that I know what I am talking about. Why we are doing this for you is because there is a very high startup mortality ratio in India. There are no unicorns from Saurashtra, despite we are having a rich business heritage in entire Saurashtra. Rajkot is the engineering hub for entire India, and everybody I've been to everywhere. I've been to places where there are big industries. When they talk about CNC machines, even though there are native manufacturers, Rajkot is being talked about only by these people. Even then, we do not have unicorns here. And we are on a mission to create 100 unicorns across India. But we wanted to start from our homeland. So, this is why we are doing all this. And once again, I thank you for being here. See, are you ready? Are you all ready? See, I want to say you one thing before we start because it will change how you listen to next some who are something, right? This is not a public webinar. We don't do this for thousands of people on a Thursday. The room you are sitting in right now is small and deliberate. Everyone in it was let in because your startup and entrepreneurship incubation center thought that you are founders who actually are going to do.
Hello, sir, voice is not coming.
Oh, I have been muted. Since when? Okay, not an issue. Yeah, somebody muted me. Now I am unmute. Can you hear me? Am I audible?
Yes, sir. Audible.
Thank you. Thank you. See, uh, please be on mute, right? Whenever you are uh, going to, if I wanted to ask you something, you can unmute and we can talk. We will keep a Q&A session at the end. And today you are going to do some real work. Some of it maybe on your paper in your mind, right? But if you give me your full attention for next 2 years, I promise you will live with something you can't get from YouTube video or a business book even. You will live with your own answers. For question that most founders spend their entire career avoiding. And here is the question. Why do 70% of the founders, smart, hardworking and capable founders even, just they're stuck doing the exact same daily grind year after year, no matter how much their revenue grows? It is not because founders are lazy, because a lazy person cannot be a founder. Not because they are bad in their business. I have underwritten and diagnosed more than 3,000 Indian businesses in last more than some 2 decades. I can tell you with total confidence that it is not a problem. It is not a talent problem. If it is a problem, it is a design problem. Design problems have design solutions. So shall we start? Are you ready? Perfect. Then let me share my screen. Okay. Is my screen visible? Right. Welcome to Scalable Business Flywheel. And here we go. See why 70% of the founders stay stuck in day-to-day grind, and why it's almost never the reason they think the reason is. Right? Number two is the 5 stages that every business goes through on its way of becoming a truly scalable, and exactly where you are on the ladder right now. It is not about where you hope someday you will be. It is exact diagnostic as to where your business is right now, and a diagnosis of yourself, not your business. You, what you personally spend your time doing inside your business, and what that is costing you. Number four is that only 3 things that you need that, that actually move the value of your business. Everything else in your business is just a noise, just a noise. And finally, what the road ahead looks like from here for you specifically, depending on what you choose to do it with. See, in few hours from now, you will know exactly which of the 5 stages you are stuck in, exactly where you are personally leaking your time, your value, and exactly what the only 3 levels are that would change that. And this is not a sales promise. That is the literal structure of the next 2 hours, and we are going to deliver on every single line of it. See, uh, let's begin with what why this happens to 70% of the founders in the first place that we discussed, right? Let me show you something. Before I show you the pattern, right? Let me tell you this. See, as I told you, I've spent last 25 plus years inside banking and NBFC world, ICICI Bank, HDFC Bank, several NBFCs, small banks, sitting on the other side of table, right? Deciding which business gets funded and which didn't. I have also been a CEO, so I have been on the other side of the table also. I am an investor, so I am on the third side of the seat also, right? I have been everywhere. And that teaches you something that a founder's seat will never teach you. I have seen hundreds of businesses' actual numbers, not their pitch decks. And you see from that position, I can see what's really happening behind those revenue figures. And over specifically for last 2 decades, working alongside banks, boards, auditors, investors, I have personally diagnosed the structural risk in over 3,000 Indian businesses and advised more than 7,500 crores in structural fund. That's not a statistics I am proud of because it's a big number. But I am telling you because it means the pattern I am about to show you is not a theory. It is a pattern that I have watched again and again, repeating almost identically across more than 3,000 businesses. And this is the pattern I am talking about. See, 78% businesses that don't grow. They don't grow not because of the competition, not because of the market conditions, but because of founder bottleneck. The business literally cannot move faster than the founder can personally push. 65% of the businesses see their margins erode even while revenue is growing. They are working every day, they are working harder than the previous day. They are selling more than the previous day, and they are somehow making less than the previous day. And if it sounds familiar to anyone in this room, whoever is present, and I would guess it does to some people, that is not a bad luck. That is a structural leak in your business. And 70% get stuck at a revenue plateau. And what they assume? That there is a competition in the market condition is like this, something that, but it is never competition, it is never the market, it is your business model, it is your broken business model, and your broken business model was never designed to scale past where it already is. And these businesses aren't failing, right? They are succeeding by most outside measures. They are earning some revenues, there is some visibility, there is some reputation. But they are not just designed to scale beyond their founders. And that is the whole game. Game is not my business is doing well. No, it is not the game. It might be doing well. The question is whether it is designed to keep doing well without you personally holding it up every single day. And that is what I want to show you. That what it actually looks like when it goes right at a scale that most of you have personally never touched. But the logic is identical. Whether you are running a business which is doing 10 lakhs a month, 5 lakhs a month, right? Or 10 crores a year or 1.5 lakh crores a year. The logic is identical. Somebody is unmuted, please. I would request you to mute. Thank you. And see, what is that logic? What is that logic? Let me show you something. See, these are the figures of Tata Steel. Last year's figures, margin, sales, 1 lakh, more than 1 lakh crores, EBITDA, cash flow, net profits, everything is visible. But let me ask you something. Does this figure show anything about Tata Steel? No. But here is what it actually looked like. See, in 2014-15, this business, and I was personally part of the team that was working alongside with the top management through this period. In 2014-15, when we started consulting of Tata Steel, they had posted a net loss of 3,926 crores, and it was not a slow year, right? There was no slow. Uh, there were no problems in the economy. There was no recession, nothing. And the net loss on a business doing close to 1,40,000 crores in sales. Their EBITDA margin was under 10%. Cash flow only 4,200 crores. By any measure that matters, this was a business in real trouble, despite its massive size. And look at where it sits today. The turnaround story. Net profit from loss to 8,190 crores. That's not a recovery. That's not a recovery from loss. That is up 599% from where it stood. EBITDA climbed 30,892 crores, 77% of margin. The GP margin 8% to 30%. Cash flow 10x, 4,200 crores to 45,031. And I'm not telling you, giving you this, my life's biggest case study, my biggest client, to impress you with their big balance sheet. I'm telling you this because the principles that took this business from 3,926 crores loss to an 8,190 crores profit are the exact same principles we are going to walk through today. And it can be applied at whatever scale your business actually sits right now. The scale changes, but the structure, the architecture, it will never change. And believe me, if this can rebuild a business of that size from a near collapse, it will absolutely work on a business at your stage. And arguably, it is very easier at your stage because you have less to unwind. Because you think your sales is close to 1,40,000 crores. You know how much unwinding you will need to do. Whereas your sales is 10 crores a year, 5 crores a year, or even less than that, you have very less unwinding to do. So, are you ready to get into the architecture itself? Are you ready? Give me a thumbs up, or you can put it in the chat also. See, let us perfect. Parji, Dishan, Krupa, perfect. Thank you. So, let's start with the single biggest misunderstanding I see in almost every founder diagnostic. Do you want to see the biggest mistake? And this is the biggest mistake. See, when founders they talk about their business, it is almost always about revenue. But it is like an iceberg above water line. Revenue generation. That we always talk about revenue generation. We always look at this thing first in the morning. Sales, revenue, right? If you have got board of directors, people are reporting this number to board. If your wife asks, if you have, or your girlfriend, if they ask how your business is doing, you will tell this number. This is my revenue. This is how I am doing. And this is even you are telling yourself that this is how I am doing in my business. And it is very obvious. Even if I ask you, many of you, if you meet personally, and if I will ask you, how is your business doing? Many of you, many of you will answer with the revenue number. We have achieved this much revenue and we are doing fine. That is almost everyone. And I want to make it clear that is not stupidity. Revenue is real. Revenue is necessary. Revenue pays the salary of your team. But revenue is the visibility. It is the surface level business success. It is the surface level business success, and the entire iceberg, the part that actually determines whether your business survives, scales, or it stalls, is all below the iceberg. You want to see what is the below the iceberg, right? See, what is below the iceberg is something where is something that you cannot entirely see in your P&L. These are the things that you will not even see in your P&L. What are these things? See, it is the revenue, your actual revenue quality, not just your top line, your profits. Because revenue without profits is just an expensive activity. Your impact you are making, the actual value you are creating, not just extracting the value. With your startup, you are generating some value, you are making some impact, and the reputation. What market thinks about you, what market believes about you when you are not in the room. So it is your actual revenue quality, your profits, your impact, and your reputation. But there is something even more important than all these things. Do you want to know what that is? That is absolute business certainty. When you have absolute certainty of quality of revenue, you have absolute certainty of profits, absolute certainty of impact, and absolute certainty of creating a revenue. That is what really drives your business. Not only revenue, not only profit, not only impact, not only reputation, but the certainty. And that certainty is created by the scalable business flywheel. We will look, look at scalable business flywheel in detail in some time, but first understand this, that this is the most important thing. That is business certainty. Let us get deep into this. See, this is your iceberg, right? This is your value delivery system that generates value for your business, that generates revenue for your business. This is the visible signal, right? You sell your product, you sell your service, you generate revenue with or without profit, and that's it. That's the entire job of this visible part. It is the revenue generation. It is the surface level signal. And nothing in this sentence, right? Nothing at the top, nothing at the visible portion. It says about the impact. It talks about the valuability, or does not even talk about the certain. And the level below, the invisible part, first part is your operational outcomes. This is where your business really generates revenue with profits, with the real visibility, impact, reputation. It is not just transaction volume, it is everything your business operationally generates. And the business certainty, Business certainty is where we have got absolute certainty of your profits, absolute certainty of revenue, absolute certainty of profits, absolute certainty of impact, absolute certainty of reputation, and that is the structural differentiation. And that structural differentiation is something that creates everything in your business. And see, uh, the founders, they mistake here almost universally. What we do is, as founders, we manage the tip. Let me show you. Uh, as founders, we always manage the tip of the iceberg. Just a moment, let me share my screen again. See, as founders, what we are used to do is we manage the tip, where our value delivery system is there, where we are generating the revenue, and we assume that everything underneath will take care of itself because the tip looks healthy, but it doesn't take care of everything by itself. And I have watched businesses with beautiful revenue lines that collapse the moment founders stepped away from 30 for 30 days because everything below the waterline was held together by nothing but founders' personal presence. So here is the question: if the revenue is not at the real scoreboard, what is the real scoreboard? See, that is what we are going to discuss next. See, every business, your business included, my business included, Ambani's, Adani's, everybody's business included. From small kirana store to Panwala to Ambani, Adani, every business included. There are three things that every business needs: founder freedom, profitable growth, and a valuable enterprise. The founder freedom, this is our FP model, by the way. Uh, it needs to have the three basic functions. Founder freedom is something where you can personally step away from the business for 30 days and have it run exactly same way without you, or sometimes even better than when you were running, right? Profitable growth means, is your business actually making more money as it gets bigger, or the growth is quietly eating up margins? Valuable enterprise is if you try to sell your business tomorrow for any damn reason, would anyone pay a real multiple for it, or would they just be paying for you? And the goal, the only goal that actually matters in long term, is to have all three at once. Most of the founders, they have at most one or two parts of this. Not only startups, some very big businesses also. And that becomes the trap. So let us see what happens when you don't have all these three things together. First, let us see what happens. Are you familiar with this? Madarino Vandro કેટલા લોકોએ જોયો છે? How many of you have seen the dancing monkey? Right? Have you seen the mother is? Okay, Krupali has seen that, Krupa has seen that. Okay, perfect. See, what happens to these monkey? This monkey is, chained, right? And till the time the monkey dances, the monkey gets the money. The moment monkey stops dancing, monkey doesn't get the money. If you have got some flexibility, you are earning, you are a bit profitable, right? You have got a somewhat flexibility. You can go for a day at some wedding, or you can take one random Sunday off. Your business is there. But if it is not valuable, the second you stop performing, the second music stops, your earning stops. That means there is no enterprise underneath you. If you try to sell your business, if you try to exit, if you tried for even for an IPO, if you go to investor, what the buyer will tell you? The buyer will tell you, I am not buying a business, I am buying you. And the person is never for sale. You dance, the business performs, everyone claps, you are doing good, but there is zero institutional value here because you are the main attraction of the show. How many of you were feeling like this in your business? How many of you are feeling like this in your business? See, perfect, perfect. Thank you. See, this is a bit of opposite problem, right? If you have got a bit of profits, right? You have got a good business model, everything runs, right? But there is no founder freedom. It is perpetual hamster wheel. This business looks fantastic from the outside. Good margin, some assets. Buyer, would actually respect it. And founder is still in the building at the 9 p.m. every day, every single night. You are receiving calls at 3 a.m. in the morning, 2 a.m., 8 a.m., 12, 11 p.m. because none of the value runs without you. You build something genuinely valuable, right? But what you have built a jail for yourself, and you have given yourself the sentence to be in the jail for that forever. How many of you are on the hamster wheel? How many of you are on the hamster wheel? Perpetually on hamster wheel. See, and what happens when you do not have profits? A fierce animal, a tiger. But imagine if the tiger doesn't have tooth, a toothless tiger. You might have a brand, you might have market position. There is no bite, no real profit conversion. Tiger that can't actually catch anything stops being dangerous. Then it just becomes a decoration, a joker, a mockery. And I see this constantly in businesses that scaled on revenue and reputation but never fix the unit economics under it. How many of you are growing but there are no profits inside anywhere? How many of you are at this stage? See, here is the most uncomfortable truth that is sitting in this room right now. Almost everyone here who has raised or most raised their hand for at least one or two or three. And I want you to hold on to whichever syndrome you recognize yourself in. Because in next few minutes I'm going to show you that how this FPV model becomes the single biggest ammunition that you will ever have in your business. But before that, I want to show you something that is going to move your ladder. I'll show you few real life case studies. I have shown you one of Tata Steel. They are our biggest customers. We have got few more customers, and I'm showing you the case study of two more customers. But before we get into that, what are the only three things you need to do in your business to move its value? Not 50 things, not 90-day plan with 40 action items, only three. For most founders, they think growth means sell more. But I'm going to show you why that instinct on its own is often the worst of the failures. Are you ready? Are you ready to see what is happening in the real world? Perfect. See, we had a client and they were into business. They wanted to grow their business. Their CEO, we went into some business seminars and he said, now I'm ready with the plan. And he presented this plan to the board. He wanted to achieve goal of doubling business and multifold growth in the net profit by a reliable rapid response system, something which he had invented, right? What his plan was? Sales, they will double the sales, 100 to 200. Variable cost will increase less, so 25 crores to 43 crores. Gross profit, it would increase from 75 crores to 157 crores. Fixed cost will increase marginally from 70 crores to 74 crores. So their net profit of 5 crores will become, instead of 10 crores, the net profit will become 83 crores and their margin will go from 5% to 42%. And I have put the PE ratio, I have taken minimum, not real for their industry, because real would be in 20s and 30s and all those things that we'll discuss later. But this is for your understanding. P, he said our P will increase by 1560%. Value of the company from 25 crores to 415 crores. Isn't it amazing that just by doubling your sales, your margin will go from 5% to 42%. 1560% increase in valuation also, from 25 crores to 415 crores. How many of you think this is amazing? How many of you think this is amazing? Do you want to know what happened in the reality? How many of you want to know what happened with them in reality? See, doubling, perfect, thank you. See, doubling your sales in just 1 year, right, means by the end of second quarter, you will understand that doubling the sales in a year is not happening. right? 100% growth from 50 lakhs to you can go to 1 crore in a year. But from 100 crores to 200 crores in 1 year, well, that seems impossible. So what the CEO did was he started offering discount. So what happened actually? They started giving discounts. They offered up to 20% discount. So their actual sale went from 100 crores to 80 crores. Variable costs remained same. Gross profit from 75 crores to 55 crores. Fixed costs remained same, 70 crores. So instead of 5 crores profit being taken to 83 crores, they actually incurred a loss of 15 crores. Their 5% margin became minus 19%, minus 400%. And I will tell you why this is a very bad decision, right? So they approached us, and this was our recovery plan. And this we achieved for our clients at the end of the year. What we asked them was, is this last table visible to everybody? Perfect. See, their self was already at 80 crores. And we told them first to remove the discount. So they removed the discount, and the customers didn't mind that much, right? Because they were uh, preparing some industrial product, and for which the customers were ready to pay. And we asked them to increase the sales by only 20%. So from 80 to without discount, it is 100, and 20% increase in that sales was 120 crores. They could do it comfortably. The variable costs increased by 12%, 25 crores to 28 crores. Gross profit from 55 crores, 92 crores. Fixed cost remained same, 70 crores, 70 crores. And net profit went from a loss of 15 crores to 22 crores. Margin minus 19% to 18%, and their P ratio improved by 40%, so 5 to 7. And their valuation from minus 75 crores to plus 154 crores. This was way, way, way better than what they were even previously earning. This was an industrial component. Man. Let me tell you, in the market, every bad assumption that you are going with, every bad assumption has a cost. And that cost is your business. The profit doesn't grow by putting some figures on the paper. It comes with the thinking. It comes with some concrete work on the ground. Giving discounts in any business, it kills the business. And you are startup founders. See, I've seen this in established founders also, but you are startup founders. People will be asking you for discount. But if you go into the discount trap, if you lower your prices for the sake of just growth, you are definitely going to fall in this trap. Many businesses they have vanished, who fell into this trap. So, how many of you learned something from this? How many of you learned something from this? Or see, even if you don't understand finance like uh, chartered accountants and all those, See, doesn't matter. Right? Because you are not supposed to be as good as the chartered accountants, right? But you must have basic understanding. What if you are doing, your margin will go negative, and your P increases when market starts believing in you. Right? One plan, one bad execution, and you are far away from the destination that you are looking for. Yes, you know, they started at the same. CEO started at the same point with this business, but one bad decision, and difference was whether you can grow or not. No, that's not the difference. Difference is how you grow, right? Let me show you one more client case study. Let me show you this. Give me a sec. Yeah. You just give me a second. Let us take 2 minutes bio break. Uh, there is some issue with my sharing. I'm not able to share. Let me fix this in 2 minutes, and we'll start again. What if you are already an established player? If what if you are not even trying to recover? You are already doing well, and you are just deciding where to point your energy next. Right? Let me show you. See, this customer was a publishing house. a very well-known publishing house, right? And they are already established, and they were the most profitable. But they were facing some new age challenges. Right? At some point of time, all the publishing houses were facing this. There was a time where books were they were not able to increase the sales dramatically and all those things. So once again, welcome to the CEO lane. Again, same mistake. The first CEO I had made 1500 crores. He said we'll take uh, our sales from 1500 crores to 3000 crores. Everything will be increasing 100%. So net profit from 150 crores to 300 crores, and our valuation will be 1500 crores from 750 crores. But luckily, they decided to check with us and they came to us with this plan. We studied this plan and we outright rejected this plan because at this scale, if you are a publishing house and you are doing 1500 crores business in India, you will never overnight double your business. Why? Because people are reading less. Now, post COVID, some people have started reading again, but still people are reading less compared to the past decades. In this situation, this plan was not feasible. So, what should be the strategic advice? So, our strategic advice was twofold. One, I will show you. Other also I will show you. But one was to marginally knock back, and other was to get into the new age media like online publishing, audible books, audiobooks means, and online content. So this was our plan part one, right? We asked them. Our question was very simple: that since people are reading less, you have not increased the price of your books for many years. Can your market, the market in which you are, can your market absorb 10% price rise? They said yes. We said no. First talk with your dealers, your distributors. They talked with few distributors. They said yes. We are ready to absorb 10% price change. So we asked them to increase price of everything by 10%. Only 10%. That was after 3 years. 3 to 4 years. After 3 to 4 years, they were increasing their prices. So the impact from 1500 crores with the same quantity, right? This you would have seen in Tata also, Tata Steel example also. We just increased prices by 10% from 1500 crores. The sales went to 1650 crores. Variable cost, they remained same. Gross profit rose by 20% to 900 crores. Fixed cost also remained the same because the quantity was same, nothing changed. But net profit from 150 crores to 300 crores. Gross margin 10 to 18%, and the P had 60% improvement. 750 crores to 2400 crores. And our second plan was to increase the quantity by 20%. This we had given them another option that even if you try very hard, being a publication company, being a bookseller company, you will be able to increase at most, your sales at most by 20%. So 1500 crores to you will go to 1800 crores. Your variable costs will increase by 20%. But study we found out that their fixed cost will not increase. In this case also, net profit will go from 150 to 300 crores. But in this situation, margin would be 17% and their PE will increase by 7% and their valuation, 5 to 7, 40%, their valuation will increase to 2100 crores. This is what a price change and the quantity change does to a business. See, what does this mean? It means that whenever you are playing with prices, right, your pricing gives you an edge over everything else, even over the quantity, even over the volume, overall volume. So it is always better to play with the prices first. But what happens in real world? Real world people go backwards. Price increase is better than volume, and volume is better than giving discounts. But what happens in real world? In real world, people start uh, giving discounts. Whenever they think our sales is dropping, growth is stalling, they start chasing volume first, then discount, but they never touch the prices because every entrepreneur that I have seen is afraid of losing a customer. But our data that we have worked with our customers, it says something different. And remember this, price moves value faster than the volume, and volume moves value faster than the discounting. Don't go in the wrong order. Are you ready to do this for your business? Here is the uh, format in which I want you to do this. Right? Write down your before and after. How you will write it? Uh, Write down your sales number, whichever sales number you are having right now. Your variable cost, sales minus variable cost is your gross profit. Then there will be fixed costs. Gross profit minus fixed cost is your net profit, and that will be your margin percentage. Net profit you multiply with P, there will be value of your company. What I want to do is to change only one variable. Either you can change sales, variable cost, or fixed cost, and see for yourself what it does to your margins and your valuation. I am giving you 5 minutes to do it. This format is there on your screen. I am giving you 5 minutes to do it. In 5 minutes, I'll be with you again and then we will discuss your figures. Please do this. And if you feel there is any difficulty or you have any question, you can put it into the chat box or you can even unmute yourself and ask about this exercise. Detailed Q&A we will take later, but if this about this exercise you have got any confusion, question, you can definitely put into the chat box or you can unmute us. See you in 5 minutes. There has been a one question. You do not need to put your exact numbers. Rough real numbers will do. Approximation in cells, approximate costs. Don't worry about the precision. This is directional. This is not an audit, right? This is directional only. You can put it down your direct rough numbers that you remember. And, and let me tell you what you need to do after that. Pick exactly any one lever, a price increase of some percentage, or quantity increase, or specific cost reduction. You take any one, just one. Run it through and fill in the after column and calculate what happens to your value of the company. Okay?
Is everybody done with the exercise? If you are done, drop a yes or thumbs up in the comment. I need you to drop a yes or a thumbs up in the comment if you have already done the exercise. Now I need you to check one thing. What is the percentage difference in the before and after in the value of the company? After you have completed this exercise, what is the percentage difference in the value of the company before and after? Drop it in the comments if you can.
Only percentage. We don't want actual rupee number, just the percentage difference. Have you observed percentage difference? And if you are comfortable sharing the percentage difference, then you can share it in the chat box, obviously. See, if you have done this exercise and if you have run your numbers, you would have seen the exact pattern that we have walked through right now. What you just did in these 5 minutes with rough numbers and a pen, that's a fraction. That's a small fraction of what happens when you create your strategy. We'll talk about it later today. Except, you know, you can do this with your real number, your real course structure. And if you have done this exercise, I would ask you to hold on to the worksheet. You will want that worksheet again. See, knowing which lever to pull is only half the problem. The other half is whether you are even the person who should be pulling it, or whether you are stuck doing work that has nothing to do with any of three levers at all. How would you know it? See, what I want you to do is I want you to think honestly about your last week, not an aspirational version of your week. Last week, as it actually happened in your business. There are only three places, or rather, only three places your time as a founder can go. I call this the scalable flywheel structure, and almost every founder I have diagnosed across 3,000 business is badly allocated across all three places. Let me show you. See, you must have heard this, but even then, let me show you. This is the scalable flywheel structure. I call it the scalable flywheel structure. See, as a founder, your time can go in the business where you will be doing operational executing. Right? In operational execution, what you will be doing, you will be doing client service. Let me move this. You will be executing client deliveries, managing daily operations, resolving customer issues, overseeing production, your service delivery. If you are a service business, handling vendor coordination, these are all the works that generate revenue, but it creates founder dependency. If you are absent for 30 days, your operations they deteriorate. Here is where the founder dependent businesses they stay trapped. Other thing where your time should go is on the business. It is the part of system design, where you have documented operating procedures, you design decision authority frameworks, build quality standards, develop team capabilities, you have transferred operational knowledge. Here the work that build, here you are doing the work that builds operational autonomy in the business. The business begins to run without the founder intervention in daily execution. Here is where the operational independence for your business begins. The real magic happens when you go above the business. See, you must have heard about in the business and on the business. This is all everybody is preaching. But this is half the knowledge. Actual work in your business happens above the business. Where it is a scalable design, where you have designed business architecture and governance structure. Uh, you have established board oversight, accountability systems, you have determined capital allocation strategy, you have defined succession and transferability planning, you have also set institutional risk management framework. This is all the work that ensures the business operates as a professionally governed institution. And here, the enterprise value becomes transparent. Here is where the real wealth in your business is created. This is the place where the real wealth is created in your business. And see, this is only diagnosis, right? What I want you to actually do this right now, I want you to do it on paper, not in your mind. See, designing your, let us put this another way. Write down, take a piece of paper, take a pen, and write down as honestly as you can. What percentage of your actual time last week in hours went into each of these three bands? Don't write what you wish were true. Write what actually happened. Take a blank sheet of paper, write three labels in, on, above, and estimate the rough percentage of your last week's working hours that went into each. And the total should be 100%. I am giving you 5 minutes to reflect on this and write down what percentage of your work went in the business, on the business, and above the business. Then we will discuss further. So it is 4:19, 4:20 actually. Okay. Uh, I'm giving you 5 minutes till 4:25. Then we'll start discussing further. And if you have got any understanding issue regarding this, please uh, put it into the chat box or unmute, and we can talk. Okay, then. Done with the exercise? What I want you to do is look at your numbers. How much of your time goes in the business, how much on the business, and how much about the business. I will tell you what I see in vast majority of founders according to my diagnosis, right? What I've mostly seen is 70%, sometimes 80%, sometimes 90% goes in the business. On the business, single digits. Above the business, I've rarely seen. Why? Because people have understanding of what is happening in the business. What is happening on the business, people have a bit of understanding through Michael Gerber. But what is the real deal? How you work about the business? Nobody knows. Out of you all, who is willing to say their in the business number out loud? Is anybody willing to share their in the business number? If you feel safe doing that, right? But what to do? What to do if your time goes in the business? Most of your time, if most of your time goes in the business, how can you change that? How can you work on the business? How can you work above the business? Right? Do you want to know how can you do that? Do you want to know how can you shift from in the business to on the business to above the business? Because above the business is where you want to be. How many of you want to learn that? Can I tell you that it has a very short answer? It is a very short answer, one word answer, and that answer is exit. When I say exit, some people think I'm talking about exiting the business. No, I'm not talking about that. There are multiple kinds of exits in a business. Most startups, when I say exit, they take it otherwise. Let me show you what the real exit looks like. Are you ready? For fair. See, first exit is exit your daily operations. See, you just told yourself the truth about where your hours go. Now I am showing you what exactly that means or where you sit on the ladder. And you are somewhere here. What it means to exit daily operations? It means the business executes its core operation, delivery, production, service without requiring your physical presence. Documented procedures, trained team, execution quality without your oversight, revenue without your presence. What it means is your operations are automated and you have got 30 days operational autonomy. But the saddest part is 70% of the businesses are stuck at this. The next exit is exit daily decisions. Your manager, your management team operates with delegated authority. Routine operational decisions, they happen without your approval. It means there is a decision independence in your business. 80% of the repeatable decisions are being made autonomously. And the sad part is only 25% reach at this stage. When you exit daily decisions, then it is time to exit the org chart. What does it mean to exit the org chart? It means that a professional CEO or MD runs your business. You transition from an executive role to board level role. You become the chairman. And here, leadership transfers. Here, founder independence becomes viable. Here, you are able to scale your business without bothering for even 1 second about your business because your business is running on autopilot. But sadly, only 5% achieve this stage. Once you exit org chart, then it is time to exit the strategic governance. What it means is an independent board or advisory structure that you create. You create that structure, and that structure provides you the oversight. Strategic decisions and risk management, they operate autonomously without you in the room. That means there is governance independence from your business. Your business operates with full institutional oversight, but sadly, only 2% complete this stage work. In the final stages, when you partially or completely exit through IPO, execution, acquisition, succession, institutional sale, here your institutional value is realizable and transferable. And here you generally get 20 to 30% EBITDA in valuation. But the sad part is only 1% execute stage 5. What I want you to do is just 1 or 2 minutes, not more than that. I don't want you to say this even, not through direct message, not through public message, but I want you to mm, realize at what stage of exit you are. I want you to do this privately, not out loud. This one is just for you, based on everything you have seen today. Your iceberg, your syndrome, your in on above numbers, right? Silently place yourself on this ladder, not where you want to be, where your honest numbers just put you. Just 15 to 30 seconds. Reflect on this. See, most of you must have landed on stage 1 or 2. And that is not an insult, that's a statistic. And statistically, that is exactly where you would expect 95% of any room of founders to land. The question is not whether you are behind somebody. The question is what the model actually looks like once you have actually moved. And that is what I want you to see next. Remember, we talked about FPV model. Let us go through that. See, as we talked, there are three parts: founder freedom, valuable enterprise, and profitable growth. When you have all three, you have an autonomous growth engine. You are not a dancing monkey. When you have all three, you have got bankable profit engine and you have got legacy business engine. And together, it creates a scalable business flywheel. But to create or to transfer it to scalable business flywheel, you will need something that moves all three, that moves founder freedom, profitable growth, and valuable enterprise. Do you want to know what are those things that move all these three and make this into a flywheel? Do you want to know? How many of you want to know? Give me a thumbs up or anything. See, this is what actually moves it. For founder freedom, you must have replicable automated operating systems in your business that you can create. You must have self certainty. Your sales must be continuous. In fact, we ask our clients while installing this scalable business flywheel sometimes that are you really able to handle the sales that it is going to generate for you? And third thing that you need is high performance independent teams. For profitable growth, you need cash flow multiplier. Remember, Tata Steel 4,200 crores to 45,000 crores. Revenue multiplier and margin multiplier. This gives you real profit, real bankable profit that you will see in your bank account, that you will see the cash in your business. And how the valuable enterprise is created? It is created with scalable business model, governance clarity, and transferable legacy value structure. This is what creates a real scalable flywheel. And this flywheel, when you have created all these things, it runs autonomously. Whatever stage you are, at every stage of your growth, whether you are starting up, whether you are scaling up, whether you are growing up, or whether you are scaling up again, whether you are growing again, whether you are multiplying, this applies every time. And this flywheel keeps running. It takes on the momentum. See, every founder in this room is standing at the same place, right? Whatever stage you are standing at the same place. But what happens to you and what happens with your business is upon you. And how? Let me show you. Not able to share my screen again. Okay, I am back again. There, I'm not able to share my screen. Let me rejoin. Give me 30 seconds. I'm somehow not able to share my screen. Oh, give me a sec. Let me try some other way. I'm not able to share my screen. Wow. Why this is happening? Let me restart the PPT. No. Let us do something. Let us share my entire screen. Entire screen. Okay. My entire screen is visible. Okay. See, now um, everybody is standing at the same space, right? What you can do is, there are three things that you can do. One thing is you do nothing. This is what, mostly people think, that if you don't do anything, you will at least be at the same stage. But this will gradually decay everything. It will add to the cost. It will add to everything. Okay, there is a problem. Okay. Okay. Perfect now. Perfect. Now it is visible again. Sorry for the issues. It is Google. And see, this cost compounds and it ultimately decays your business. You can stay wherever you want, but if you don't choose to do anything, it compounds the institutional risk and it creates the terminal decay of growth and value. One person who knows everything in your business goes out, one bad year, one unprofitable year, one revenue leak, one client gone, and your business becomes fragile. Your business becomes fragile and it decays your business. Or you can choose to apply the scalable business flywheel right now. When your business grows, you can again apply and you can create a scalable institution. Where you are standing right now is a strategic decision point. Right now, it is your decision where to take your business. See, you have seen this scalable flywheel, scalable business flywheel model. You have seen in, out, above. You have diagnosed where you are on the ladder. You have diagnosed what are the levers you can pull. Everything you have done. Now you can do three things. One thing is you don't do anything. And that is so simple that I even didn't write it. But your one option is do it yourself. I am saying this without any kind of sarcasm. If you are not doing anything, this is better that you have whatever you learned, you apply in your business and come back to us and tell us how it goes, how you were able to build it, how you were able to apply it, and what benefits did you get. We'll be more than happy if you have done this. Another option is we can do it together, and how we can do is you can join us for half day one-on-one paid consultation. You bring your data, you build your scalable business flywheel together, you use it, you repay you benefits forever because it is yours. It is specifically built for your own business, and you can use, reuse forever. And if you want to do that, uh, you can connect with Kashini. Here is her number. Uh, you can call her between 5 p.m. to 7 p.m. for an appointment. If you wish, you can take screenshot of this, or you can call her, you can WhatsApp her, whatever you want to do. Take the screenshot. I'm giving you 30 seconds, and then we'll stop sharing screen and we'll take question answers. Whoever wanted to take the screenshot, have you taken your screenshot? Perfect. Okay. Perfect. So now we are ready for the Q&A. Oh, and I have missed one question that was from chemical business. Sorry, at 405. Where you are doing the exercise. If the prices are changing on weekly basis, there are many businesses. You take petroleum, you take chemicals, mostly all the businesses, right? In that case, you must have an idea of average percentage of cost, right? So you can take your cost accordingly because where the prices are changing, you obviously go with the percentages and it will work as fine. What qualities must be in the leader? See, leadership is altogether a different thing, that we can discuss in detail, but it is going to take so much of time. But the One quality that every leader must have is that the leader should not treat his or her team, like family, because you are there to work on something as a team. So there must be clarity. See, clarity presides everything, whether it is business, whether it is leadership, whether it is even your life. Clarity precedes everything. Whatever you do in your life, there must be clarity. So leadership is first about clarity. You must yourself have the clarity, and you should be able to convey that clarity to your team. And that is the quality every leader must have. And most of the leaders who are there, they have this quality. They are able to convey their thoughts in a clear manner, the way that the other person understands it. Because right now we are living in a situation, uh, where if you are leading a team, right, and if you are, when we started our career, our bosses were real bosses, right? They would abuse you, they would threaten you, they would harass you. But at that time, people wanted to do decent jobs, and that were in banks and NBFCs and all those things. So they would, list, go through all these things, and they wouldn't even mind sometimes. Right now, people are doing everything for their own satisfaction, job satisfaction, career, all those things, and money they will get from anywhere. Right? When we started our career, there were only two private sector banks, ICICI Bank and HDFC Bank. Now there are 23 to choose from. See, there are career options. People have career options, right? So leader must be clear. Clarity presides everything. So that is what it is going to be. Any other questions? Perfect. So, yes, there are no other questions. If anybody wants to get connected with us, we are there on social media. I will share number of Kashini with you also. And once again, I am very much thankful to each and every one of you for spending a Thursday afternoon with us, for giving the most precious thing that anybody can give in this time and age is your time and your attention. And more than that, uh, I'm thankful to Saurashtra University Startup and Entrepreneurship Cell, Incubation Center of Saurashtra University. And I hope you all do well, and I wish you all the very best for your future. Thank you. Bye.
Thank you so much, everyone, for joining this amazing webinar on a Thursday afternoon. We wish you all the very best for the future. And if you have any queries, if you want to connect with us, my number has already been shared. You can contact me between 5 to 7. If you want to share how was your experience in the webinar, you can share that too on my number. And we'll meet you very soon. Thank you.
Can all members leave this chat?